here we go. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on another exciting day in the silver market. In case you've been watching the thumbnail and headlines for this video, it's been quite action-packed, just like silver. But I am joined now with David Smith. See the teamwork in our crew here. Andy James Bond Checkman was ready to fill in. Weren't sure if David was. I couldn't reach him right before. So, David, is there any chance you were getting the latest silver insight from Jeff Curry of Goldman Sachs? That's what the audience wants to know. We all just learned last night how the silver market's bigger than equities. So, is there any scoops? And welcome on in, my friend.
Well, I haven't had any scoops. I'm going by gut reaction and by realizing my limitations as somebody who's not inside the team there with Jeff. And even if we were, and he bought me a beer, I'm not real sure that I'd get the straight scoop from him.
Yeah, I'd maybe want to keep a lid on that beer too, or get a bottled one. You never know with some of these bankers, at least.
Yeah.
Remember in the day.
Have a taste tester, or something.
Yeah, and real quick before we get started, I'd like to mention that today's video is sponsored and brought to you by Silver Sands. Silver company that is down in Argentina, and they had some nice news here. Pleased to announce remaining drill results. Hopefully, Yari, you could get that in the comment field below or the description field, so people could take a look. Certainly, if you're watching the video because you're interested in silver. Here we hear from my friend Keith Anderson, who many of you met at Silverfest or have seen on the show. Saying the 2020 drilling campaign exceeded our expectations, supports our firm belief in the project. I've really had a pleasure getting to know Keith. David, before we start, I was looking up the last time Keith Anderson was on the show. That's Keith up there. And look at the silver chart in the background. The title, Silver Spikes $1, drops $2.50. I was thinking, gee, that looks a little bit like today. Maybe they just wheel this one out. Why draw a new one? You can just take it from the past. And David, with all of that said, we have COMEX options expiration today. I would suggest that some of this was predictable. We have delivery coming up shortly. What do you make of all this? Where do we stand, and what is going on as we sit here on Tuesday afternoon?
Chris, I think when you look at these charts, it brings to mind the term painting the charts. And there's somebody out there that is masterful at this and creating something behind the mirrors as to what's really going on. And the thing that I feel about those of us that are interested in being on board. Is there any chance
it would be a banker that talks about silver on CNBC and Bloomberg?
It could very well be.
Okay.
But when this thing finally breaks through, I think it will be historic, and I think it'll be a situation where if you're not positioned at least reasonably well, and if you don't pull the trigger fast to get the rest of what you want, then you're going to be seeing something that is just you're just going to be a spectator rather than speculator. I think. Did I lose you?
I lost your video, but I can still hear you. Do you see the share video button somewhere there?
Somebody came in on trying to call me here. Let's see. I think I knew who it was.
Okay,
let me try to get this.
If it's any prestigious banks that can educate us on the ever expanding supply of the silver market. And David, let's start in there, because perhaps you could, or even a step before that. Can you say when you started following silver, how long you've been doing this? Give a little of your background so that folks who maybe are hearing you for the first time might understand that.
Sure. I became intrigued with the silver story in the early 70s after reading Harry Brown's book, How to Survive the Coming Monetary Devaluation. And he wrote 2 or 3 books. And I became very intrigued with his writing style. He was working for Jerome Smith at the time, no relation to me. And this was a Canadian company, and they had a newsletter. I ended up with a small Swiss bank account in the days when regular street folks like ourselves could actually get one. And it was pretty exciting. I bought physical and put it in there. I remember, I think my first purchase was $4.23 the ounce.
What year
And
was that?
watched gold be detached that decade, going from 100 to 300 to 100 again. And then just kind of kept acquiring silver. I didn't do hardly anything with silver stocks, but I was very active in the futures market. And so I traded a lot of silver futures and some gold. And I had a pretty good run with sugar in 1980 after the silver bust. But it never really left me. And I didn't know at the time it would take me so long to get a chance to really do what I didn't do because of my lack of really understanding things in those days, to try to make the money that I gave back. Because this is it, kind of interesting, I think. I went to the one conference that I went to was in 1980. I think it was February. I went to San Francisco, and Doug Casey spoke there, and Harry Brown and Jerome Smith and some other big lights. And I remember Harry coming out and saying silver had hit 50 and it was about 39 or 42, somewhere in there, banging around. He said, if it goes below 27.50, that means the bull market is over. And so I was going to go out and wire in a stop loss, and I was going to try to figure it out for the physical that I had. And I was really, because he was the guy that was the oracle to me. And then I remember we went out and had a break, and I talked to him for a little bit. And the second speaker was Jerome Smith, who had predicted $50 silver years before it happened. Well, Jerome now was talking about $100 silver. And I remember that it wasn't through greed that I stayed from going and putting in the stop loss, but it was just, I suppose, I lacked a little firmness of the conviction listening to Jerome after listening to Harry. And I should have followed my initial intuition. And I didn't do that. And so I held on pretty much, and I had a little bit of margin. I remember my last purchase in the Swiss bank was about $37 an ounce. And I didn't do it on margin. I did it, for cash. But the day came when the shorts were the rulers. And I remember silver dropping. I don't remember where it started, but I remember where it ended up that day, $10.80. And I remember thinking about how much of my paper wealth had just gone away.
Yeah.
And so it was a big shock. And I remember calling my broker, and I said, where do you think silver is going to end up eventually? He said, $5 an ounce. Well, it rose to 25 after that, which is a 50% retracement, perfect wave retracement. And I actually had bought at 11. And on the breakout, my broker convinced me to cover at about $13, to hedge it. And I watched it go to 25, just like I thought it would. So I was kind of pretty foolish. And I learned after that you got to pay attention mostly to yourself if you're going to succeed. And you will make mistakes, but eventually, if you survive long enough, you'll start getting things right more than you get them wrong. And so sure enough, it went to $5. It took a while to get down there, but it was a grinding, thing. And I never thought at the time it would take 22 years for me to have a chance to go long again and make a difference. And 22 is my lucky number. So that was kind of interesting that turned out. So I started accumulating in about 2000 to 2002 with some gold and silver. And this time I became very active in trading stocks. So that's the evolution that I had. I ran into David Morgan, I think sometime in late 2000. I remember distinctly writing to him the Friday before 9/11, suggesting that I had purchased 6 silver calls. And then, of course, Monday, the markets closed for several days. And then there was 20 million ounces that were buried under the Trade Center towers for a while. And I don't remember if I offset those calls or not, but I had a pretty good sized profit, which definitely melted away after a few weeks. So it's been a struggle, but I'll tell you, I really think we're awfully close to the promised land. And I can forgive people for thinking that's all they've heard from us for a long time, but I think we're getting very, very close, and I can just feel it. Everything seems to be different now than it was even a few weeks ago.
All right. Well, David Smith raising the bar for an opening statement on the Arcadia Economics Show. Well done. I will be here for the next 2 hours with the questions I have already. Um, Maybe perhaps the first one to start with, and I want to get to what happened on 9/11 with the silver, also the reaction there. I'm going to pull up the chart here because I'll bet that was a fascinating one. And I have read about the gold and silver that went missing and a lot of mysterious stuff under the buildings that day. But you mentioned a couple of times, well, if I had been wiser or, looked at it differently, maybe there's the part of it that we could have looked at differently, assuming the game is more rigged than it is. But I think what you describe even in 1980 is interesting because it's the same phenomenon now where anyone who follows supply and demand and logic, got clobbered. And in fact, it's funny you mentioned Jerome Smith because I was watching a video about Silver Thursday. Perhaps you probably know more about this. I believe the Hunt brothers were heavily influenced by Jerome Smith too. Is that right?
Yes, they were. Mm-hmm.
And as you were saying that, for the first time ever, I was thinking, well, similar to what I thought about myself in 2011 with the Hunt brothers, if they hadn't changed the margin requirements, I mean, we sit here all the time, talk about $50 silver as the high, but what if they hadn't changed the margin requirements, limited the buy side? Silver might have gone past $50 back in 1980. We have no idea what it's really worth.
That's really true. They might have been able to break the COMEX back then, and what they did was, they had that potential to do that anytime they wanted, but going to offset only was the death of that opportunity for the longs. And, it was almost as immoral is what Robinhood did recently here, where they actually closed out the accounts of people that had not yet had a margin call. That's a deprivation of personal property. That to me is one of the most despicable things that I've ever heard the street doing. You've got a position, you haven't received a margin call, but your broker closes you out. The next day, some of those positions were up 300%. I mean, anybody that would do that, how could you ever trust them again? And that shows you why you've got to hold physical. You've got to hold it in something like PSLV, where you're pretty darn certain that Eric's got all the silver he says he has. You've got to have some shares and have a plan for getting out, mining shares, and have shares in companies that are forward thinking, that hold back some of their silver occasionally, which, I don't know how often you mention company names here, but we all know First Majestic does it. And, several other companies, and then they sell it and make good money for their shareholders. But it's a different situation. It's a different game. And what they did to the Hunts, which broke the Hunts back, really, that was the liquidation of one of the largest fortunes in American history. And I believe that Jim Sinclair was the guy that worked through that with the Treasury Department to get that silver out in a way that didn't, take it down to $2 or something. But it was a rough time. And there was something I always wondered, why Jerome Smith changed his view about $50 silver, because I'd read his letters every week, and nobody could answer to me why he started talking $100 silver and why he was wrong, until I met David Morgan and talked to him for a while, and he provided the answer. And that was Jerome Smith had not factored in leaching and open pit, which enabled low grades to be, mined, and created a massive new supply for silver. He never foresaw that. He was based upon the metrics that were in front of his face. And if those continued, just like if the Hunt brothers, as you mentioned, hadn't been forced to go, sales only, it would have changed everything. And we probably would have seen $200 silver sometime in the the 1990s. But that metric changed everything, and it ground prices down for 20 years. And I don't know what the percentage of silver that came from base metals was in 1980 versus now, but I'll bet you that it was a lot less than the 70% that they do now, and more of it came from the primary silver, because I think that opened things up for massive open pits for people that were also mining copper and some gold and base metals and things like that. And I think that's where a big flood of that new silver came from. But that David had it figured out, and that broke the argument that Jerome Smith had.
Yeah, that's really fascinating to hear you mention. I have Jerome's book. It's in my queue. But to think that he was saying even back then about $100, and then you just cited even the case for $200 silver in the 90s, which also reminds me that I'm guessing you probably saw, because I got Doug Casey's 1979 book, Crisis Investing, which is fascinating. I mean, his entire chapter about silver was about the manipulation of the market. He even says at one point, it is this manipulation of the market that must start as the analysis for silver. I mean, he was going back to LBJ and the things that happened there. But on his appearance on Donahue, did you ever happen to catch that?
I did. I remember that. It was color, not black and white, but it wasn't real clear. But I remember him being on there. Yeah, and he was been proven right in spades. And of course, that book is, I think, one of the largest, if not the largest, of its kind in that sector that in history for sales.
Yeah, and it's interesting because while he was on the show, he gave a gold target. I believe it was either $3,300 or $3,400. And Doug Casey doesn't, really, he's not like holding back most of the time. So I remember just being struck. I'm picturing where I was when I heard it that day, because he sounded very confident, and I'm sure that he had some numbers supporting his calculation. And again, similarly, it just makes me think, wow, if there were numbers, assuming there were numbers back in 1980 to support $3,300 gold, when I don't even know if the debt was $1 trillion yet. We didn't have QE. It's really stunning to think what could be on the other side of whenever this COMEX fraud is over.
Chris, I don't think that any person alive today knows what silver should be going for. The price and the value have become so distorted, and it's gone on for 30 years at least, that we don't know. I don't know. I know it's a whole lot higher than it is now. And whether that price is $150 or $600, I don't know. And it may go to 600 and then go back to 150, but it's not ever going to be at 25 again when this thing finally blows up. And there was an experience I had the same day that Jerome and Harry spoke that I've never shared with too many people, but it was prescient, I think, in a way. That evening, after there was this where he was speaking, held, I don't know, 500 to 1,000 people. It was like a university auditorium rather than the flat table type things we have like in the Canadian conferences and stuff. But this was in such the layered chairs. Jerome Smith was down by himself when I went into this auditorium, and an elderly lady was speaking with him. And I got to within about 10 feet of them, and then I stopped to be polite. I wanted to talk to him, and he was talking to her about buying silver. She was got to be in her 80s. And I often wondered, I bet you anything she bought silver, and I'll bet you anything she lost her shirt over the next 20 years, or if she was alive that long. I did get to talk to him, but that was really kind of fascinating. But that's the sort of thing we don't want to have happen this time around. There will come a time when the premise, which is it's valid now, will become invalid, and silver will be as some ungodly figure, and people will have all sorts of reasons why it's going to double from that, but it won't be true anymore. And I don't know where that is, and nobody else does either. But if a person doesn't want to ride this back down again, or they will regret it for the rest of their life, whether they're young or old. So we got to get it right this time, and you don't have to do the last eighth like Jesse Livermore says, but kind of handle that greed and fear piece and try to take a big chunk out. And that's why David and I wrote the book Second Chance, because we have strategies that accord with human nature, and I think will get you out with most of your money in your mining stocks and your physical, if you come up with a plan and you hew to it fairly closely. And I don't know any of the book, that tackles it the way we do, but it's going to be something. And I know there are people that will sell the day before it happens. And I understand why they do that. They go, I can't take it any longer. But if you keep showing up, something's going to happen. Either you're going to die, or you're going to quit, or something's going to happen. And I think something's going to happen fairly soon.
Yeah, good news for silver investors. The price might move before we're all dead. Hooray! So I certainly can associate with that feeling. I'm guessing in your book on sound advice is not buying weekly First Majestic silver options and making markets on short squeezes, but we'll leave that aside because David, you just laid out, you saw what happened during the Hunt brothers. Perhaps before we wrap up, maybe we could touch on 2011 as well. But given all of that experience, and as you point out, it's really, if there's ever a market that has almost nothing to do with fundamentals, but you're sensing fear and greed and emotion and patience and all these things you just talked about, how would you compare whatever you call what you're feeling, experiencing, what you're seeing in the silver market today? Have you ever felt like this level of intensity, or whatever metric you want to use to describe that you can put in context for people?
You know, I can tell you the elements, some of the elements that I feel. It's not like FOMO, and it's not like it's a kind of a sense of quiet. I don't want to say confidence. I mean, there's a better word than that, but a sense of quiet feeling that yes, this is going to happen, and it took a long time, but it's going to get here. And just, don't make any big moves. Make sure you have enough. Keep paying attention. But I look at the people around me that I consider my peers or my mentors, and most of them seem to be acting and speaking differently than they ever have before. And they're not touting it. I mean, they're not shouting like, oh, you got to do this now. It's like they know that this is different. There are elements that didn't exist even a few weeks ago that are going to lead to a complete cataclysmic destruction of the way it's used to be. And we don't know how it'll look or exactly when it'll happen, but it's going to be tectonic plates grinding against each other until the pressure can't take it anymore. And anybody who gets out now or who sells at $35, and they'll be selling 35 to 45 on the way up, people will go, oh, I got back even, or I made some money. And then they watch it go into triple digits, and they're going to go, oh my God, I think selling too soon is going to be a real problem for people, or selling in tranches on the web. Oh, I got a double, and there's a time to sell a double, and the Katusi and the Casey double, that's valid 80% of the time. When you see a move like that, you want to sell. But for your core holdings, I think this is going to be the time when you do not want to sell until it's going vertical, and it's gone that way for a while, and it's discrediting all the bears. You want to stick with it a little longer. Your mining stocks, if it goes like I think it could go, some of these stocks that have never traded above $12 or $15 are going to go to 50, just like what the tech wreck did in 2000. And you're going to be a hero. You're going to sell at 50, and 2 weeks later they're going to be trading at 95. I mean, there are going to be stocks like that. And so be careful and make sure that your picture is big enough. And then when it gets really big, don't overstay your welcome. And I know that sounds contradictory, but I think you have to be able to hold two conflicting ideas in your head at the same time in order to get out of this financially alive when it does happen.
Yeah, it's really beautiful advice you passed along there, because maybe this is why it's been always so intriguing to me when I was learning this on an equity option trading floor, which is a derivative, because there's moving pieces, and perhaps something maybe we all could have commented, or at least I could have done a better job of commenting on, is that, you could say, all right, silver is worth $50 today, or we think it's going to be worth $50 next year. But if they double the money supply again, it's a moving part. And I guess what got me into silver is that, even before I knew about silver, I could see the dollar was a Ponzi scheme. Once Peter Schiff explained how the Fed really works, you get basic, get to the second page of von Mises's book. It's pretty much like the mystery's resolved. then you spend a decade or so believing, wait a second, this couldn't really be how it works. And all these guys are missing that. Although, David, you mentioned the stocks, and I have that quote pulled up. Fortunately, I have saved on my phone because it's been a while since we brought this up. I'd love to hear your reaction. This is from Doug Casey's book, Crisis Investing, and the silver chapter he mentions from 1962 to 1968, and between that period, silver went from, on chart I found, $1.09 to $2.50. Does that sound about right to you?
It does.
Okay. The average penny silver stock moved upwards. Would you like to take a guess at what is the multiple? He says the average silver penny stock moved up. So was it 10 bagger, 50 bagger?
I don't remember, but I know it was off the charts. And I think it can happen again for somewhat different reasons and some similar reasons as well, too. I think the best of the best are going to do something like that.
Well, Doug says the average penny silver stock moved upwards over 150 times in price. One went up over 1,000 times due to a mere doubling of the price of silver and speculative fervor. So David, obviously, will label clearly this is not legal financial advice. I mean, I don't even know what financial advisor could say definitively, but let's say we do see all this pressure get overwhelmed and we're sitting there with $100 silver. You want to pick a particular name? Like, what's First Majestic trading at with $100 silver? And also, I mean, with the short position removed, it's interesting, short position goes from 23% of the float down to 10. First Majestic's $5 higher. I wonder if that's just a preview of what's to come. But any thoughts on the stocks based on what Doug said there?
Well, I think the smaller juniors are the ones that could go, thousands of percent multiples. For example, Pan American may go to 250. I don't know. But I think it's more likely that a small stock that's trading now at $2 could go to 100 than it is that Pan American will go to 4,000. It's just easier to move that small, and people will go into that stock, in order to try to get those big numbers. And then there'll be a couple new discoveries. I think there's one expiration company that has the potential, the silver company that's tied into a producer company, that could be one of those stocks that does a moonshot, because they're in the silver belt in Mexico. They're exploring, looking for the other half of a massive deposit that was mined for several hundred years, that put out grades that are in the pounds per ton, rather than ounces, and it just are the kilos, and that's the sort of thing. And there could be a new deposit. There's a couple of deposits that are on the cusp now that might turn out to be massive for silver. So there'll be a surprise or two there. I do think that, if you look at the first part of this, starting say from 2000 roughly to now, there've only been a couple big discoveries, and they've driven investor interest quite a ways. But I think there's some on the cusp now. I think there's 2 or 3 gold discoveries and 1 or 2 or 3, maybe at the most, silver discoveries that could light a fire that would be a conflagration upward in the stock price of these companies, and by definition, a halo around the others that have silver in the name, this type of thing, that would drive the whole sector into a manic, explosive, up move. And so that's why I think that what people do now, if they just take their time and research carefully the mining stocks and get the best ones, and there's ones coming out now I've never heard a name of before, and I've never heard. In fact, they're running out of good names. Some of them you go, oh, is this a mining stock? And it turns out it is. They can't even put gold and silver in there anymore. It's been so overused. And then the people you've never heard of too. And I'm sticking with people I've heard of before who've done it. And I'd rather have 25 or 30 stocks all together, some of which are seniors, and say 10 or 12 juniors, and 6 or 8 exploration plays, than have 50 or 100 that I can't keep track of. And I know that I'll miss a couple that will be moonshots, but you know what? A very high percentage of what I have, I think, are going to do very well. And I expect to do 400 to 800% on this move on an average stock, that if I can hang on to them that long. But I realized that some of those stocks could very well be 20, 30, 40, 50x. And I'm not counting on that. And I'm not buying mortgage ahead of time on that, but I know that that could happen, you know.
Now, is that before or after Janet Yellen supersizes the hyperinflation?
Probably sometime late in the game, you know, when people think it could never drop. But people need to think about how I'm going to get out of this, you know, how I'm going to sell my physical. Am I going to sell? You should be selling some on the way up, you know, how will that look? And this type of a thing. And it's not easy. None of us get it right. But, you know, I remember that David Morgan he called it to within one day of the 2011 top. And I wrote the next day to Greg McCoach and I gave my opinion. So we got it pretty close, and he's good at picking tops, a lot better than bottoms. And he is for his subscribers. He said, look, I'm going to tell you when I think we're pretty close to the top, and I'm watching this. And Mike, Maloney over at Silver Gold, he's got the same thing for his people that subscribe. So people are going to try to get it right. And I think that there is a maturity on the part of the leading lights this time around, and Rick Rule, you know, and Jim Rickards and that. I think they have the maturity to caution people near the top to not be cheerleaders that it's going to double from there, because they know, like Jim Bishop said, there's a time to be in mining stocks and there's a time to be out, period. And boy, I'll tell you, after this top, we don't want to be hanging around too long after that, whenever that is. And this is the thing. It could be something that is over in 1 or 2 or 3 years. I mean, you see what's happened to some of these stocks where they do these incredible moonshots, or it could take a decade. We don't know. But as it builds out, I think we'll get some clues.
Yeah. And a question I have for you on that, how do you balance that with what is actually happening at the Fed? Because everything you said makes sense if we have a real currency. But I mean, here we are this late in the game, and they actually pimped out Powell today, and he says inflation is soft. I mean, 40% of the dollars created were printed in the last year, and this guy's still saying it's soft. We had a quote from Janet Yellen last week where she was saying, well, is there such a thing as too much? Well, I'll bet the Germans could answer that question. David, you also have the bond market getting clobbered over the last week and a half now, which, you know, they say people are worried about inflation. I'm not sure that I buy that. I mean, why are they all of a sudden worried about inflation? I think they're worried about the bond market. And it's like, how do you balance that where partly, I guess why I didn't sell at the top or really anywhere near the top in 2011, you had QE2 going on. You had the debt ceiling getting blown through. S&P even woke up and downgraded the US. It was like, geez, at some point, I mean, I know it's hard to imagine because it's been so long since it's happened on a bigger scale, but it's like, if you see this commentary now, like what can somebody point to that they're not going to ride this dollar till it's in the ground? And everything we've learned is that that's one of those things that goes really, really slowly until it goes really, really quickly. So what if silver, you know, is at $75 later on this year, but, you know, the Fed's responding with QE8 and then they're saying, well, next day, QE9. How do you balance that in there?
I'll tell you, I don't know if I'm answering your question, but I am saying something that I think is significant. You know, Jim Rickards talks about the SDRs taking over from the US dollar and becoming the reserve currency, and the US dollar becomes just another currency. And that would usher in massive inflation for us and the destruction of what's left of the purchasing power. I think these people have a certain amount of tools and a certain way of looking at things, and I don't think they're capable of working into a new paradigm. I don't think they have, they're committed to it and they'll do whatever they can to defend it to the death, but they don't have the tools. I don't think there's a Volcker out there or you know, some kind of a paradigm thinker that can come up with how we get through this intact and have you know, something that's sensible for a lot of people. They're just, and they're not out for us, I can tell you that. So whatever they say, I'd be cautious about paying much attention to it, to think that it might be the truth. But we're in for some horrific times, And, we're at the end of the fourth turning with the social, political changes going on. And we're trying to get out of COVID. I mean, hey, let's have some more things to complicate this issue. Back in 1979, in the 70s, all you had to worry about was stagflation. Now we have stagflation again, and we have the instant trading. I mean, my gosh, somebody can be out there in the boat in the middle of Indian Ocean and be buying and selling mining stocks from their phone, and that was not the case before. You had to call it in. It's all different. So it's going to go faster and higher and lower. The volatility is going to be stunning. It's going to be like Bitcoin, where it can drop $9,000 or $10,000 overnight and be higher the next day. So it's going to be a ride, and I think it's worth getting on board. And what's nice about it is the people listening don't have to mortgage their house to get this right. It's so asymmetric that a modest amount put into physical and some well-chosen mining stocks has the potential to give you a reward that's bigger than you can imagine.
Yeah, and I like the sound of that volatility you mentioned there. Hopefully before Friday's option expiration cycle would be great. David, I guess we've talked about it a little bit. And here it looks like options expiration wrapping up as things settle down, right? I think if you go back to the video yesterday, I was surprised when it got above $28 because it looked like there was a big call option position at the 28 strike, which usually the banks are short. So looks like we've made it through that. Looks like they had to spoof it pretty heavily while a lot of people were watching, which is nothing new for the silver market. But back to the COMEX, I mean, you've described, last half hour of how the intensity is higher. This is the first time ever I've had people tell me that I've had more than one person say that I have clients that are taking delivery of on COMEX. Assuming there's other people out there in the world that are. I would dispute Jeff Curry's analysis that this is just some retail traders that are in their like TD Ameritrade account trying to juice things up. What are you expecting to see the rest of this week?
Well, what you just said, ask yourself, why would any of these players tell the truth? Why would you expect them to, even if they know the truth, why would you expect them to tell it? They're not going to tell us. I think what's going to happen, I know people were watching the expiration date and all that, and we could have had fireworks, but I sense that when this happens, it's going to come out of nowhere, and it'll seem that way. It might be on a Sunday night. It might be, late in the trading day when a lot of people have gone home on a weekday. It might be over a 3-day weekend, but it'll be something where silver opens $5 or $10 higher, but it doesn't fill in the gap ever, or, for years, if ever. And so anybody that's going to wait and think, oh, I'll spot this and I'll get on, they're going to be disappointed. And I'm not saying go all in now, although it might not be a bad idea, but at least get what you feel like. If I couldn't get any more to what I feel comfortable riding the bull with what I have. And if you get lucky, you'll get all you want. But if not, you'll have something so you can be in there. You can be a player. I don't think anybody wants to miss this. And there'll be people that will because they haven't bought anything. But I just think it's going to come at us in a way that we don't expect. And it may start small in one part of the globe and become huge. There may be some thing where it turns out SLV doesn't have any silver. I don't know what it would be. And it may be even something that casts aspersions on who has the gold. But when it does, there'll be a crossing of the Rubicon. And I wrote an essay with that one time about Caesar crossing the Rubicon. You can't turn back. And that next day, things will be different and they'll never be the same again. And I don't know exactly what they'll look like, but I know they'll be a whole lot different than they were the day before.
Yeah, well, I agree with what you're saying. It's interesting, though. I mean, to most of the world, it's going to come completely unexpected. But I don't know if silver ever moves in my lifetime. I mean, I don't know how I'm going to stop looking. I mean, if it's $20 next year, I'll still be sitting there like it seems illogical. So I wonder if that's a matter of perspective. Where for the silver bugs, if we're always looking, then, or I don't know. I mean, maybe. Although actually, even in line with what you said, I think the way that silver squeeze came out of left field, that was unexpected. And David, actually, let me ask you this. What would you say if 5 months from now, I told you that we were talking again on here, and once things were a bit more clear, that we were looking back on that weekend of Sunday, January 31st. Silver opens up on the open after the bullion dealers have gone offline. It's $30, over $30 in the future, Monday the 1st. Then you have the JP Morgan announcement in the middle of the night in between there. Then the thing gets hammered to heck. Then they change the prospectus the next day. They pimp Jeff Curry out to give some whoppers on the 2nd and on the 4th. Well, they changed their prospectus on the 3rd. He doesn't mention anything about that. I call iShares on the 5th. They didn't mention anything about that. I'll bet if you called iShares today, they wouldn't mention anything about that. What, to me, it feels like something broke that day. And that ever since then, it's like you had a crime scene and now it's a cover up. Because, yeah, while they've been doing some shady stuff for a while, like this is the first time it seems like, I mean, putting Jeff Curry on was the things he's saying, you know, his numbers don't even add up. Even if you took his assumptions as valid, like it just seems like something to me feels like it broke then. And in line, last part here is just with what you were saying, how I agree where you said a lot of the long-time silver guys, we've been talking about it for the last 3 weeks where it felt like something has happened, even though we couldn't put it into words, but we're seeing these SLV numbers that don't add up. And I think, and you talked to a lot of them too, we're even more than we can put into words. I think there's an overwhelming feeling that so many, not just within the silver world, but in different areas, and we're seeing a lot of unusual things happen. So any thoughts on that?
I think something did break. I think you're exactly right. And I remember the Thursday, Friday preceding that weekend, getting a sense of what took place at GameStop, you know, with Wall Street bets. And I was talking to David Morgan, and we were going to do something the following week and talk about it each day, you know. And I figured, well, we'll come up with a strategy next week and build it out as we go. I had no idea that the next day, Saturday, would see some of the biggest sales of physical silver that have ever taken place. And people in the business said, I've never seen anything like it. And I've been in the business 25 to 40 years. And there was no physical silver in the United States available to the retail investor by Sunday afternoon. And these guys were having to pull their sales because they didn't have any more coverage on the futures. And they were afraid of opening up $5 higher on Monday morning and being wiped out. And something did break. And it's almost like, you know, when the Titanic hit that iceberg, it didn't seem like that big a deal. Something fatal had happened there. And then it was made worse by the way the people dealt with it, because it still could have been fixed. But this is different, and we don't know. And I think some of the biggest gainers on this are going to be some of the millennials who don't know as much as you and I know. We know too much sometimes. And we're thinking, oh, well, it did this way, or there'll be a resistance at this point. And maybe maybe there isn't a resistance at $40. Maybe it goes to 60. And maybe some of those millennials, they're not smart enough to know that silver's supposed to stop at 40, and it doesn't. And I can tell you that it's already happened once. Look at all the people that talked when silver was 18. Oh, it's going to go to 1950 or 20, and it's going to pound, you know, bang against that for several months. And finally, we figure in a few months it'll hit 22. Well, Mr. Market didn't know he was supposed to stop, and he goes to 29. Only this time it won't be from 18 to 29. It'll be from 30 to 55. And then it'll retrace to 52, and then it'll go to 90. I mean, this will be different, and it'll catch a lot of people off guard, and there'll be people that can't get back on.
Well, it's going to be exciting to watch. I'm darn excited to see the end of this week, how that plays out. I think there's a lot of pressure, and we'll see how it goes. And keep in mind, I guess it doesn't have to be like a full pants down on the COMEX. I mean, I'm even curious, once silver gets above 30, is there so much mania then Wall Street piles in? That will be my guess, David. We'll see how that plays out. But I'll guess that once it gets above 30, I mean, just in the same way, I mean, 3 weeks ago, they were talking about silver manipulation on CNBC and the Wall Street Journal. So I wonder how things will look once it cracks that 30 market for a little bit longer than last time.
Well, I wonder as well, too, you know, and one of my friends, you know, call it reading the tea leaves, but little things keep coming in. Again, saying how these people that I respect seem to be dealing with it a little differently, and there's I don't know whether you want to call it a quiet confidence or whatever it is, but it's like they're feeling more than they can put into words. And one of my friends said, I've been subscribing to this particular letter forever, and I think the guy's been writing for 30 years. He said yesterday was the first day he's ever put out an alert since he started doing the letter. It was an alert about silver, buy PSLV and buy some physical and stuff. And he has never done that before, not once. And these are the type of things that tell me that something different is going on, something that we don't fully understand. And if we wait until we get the answers, it'll be too late to really fully participate.
I think that that's probably how it's going to go down, which means it'll probably go down the exact opposite of that. But David, thoughts on any quick thoughts on 2011 lessons learned from there, or 1980, but in particular 2011? Any thoughts that or memories this is bringing back?
Well, it's kind of interesting. In 2001, I wrote on a piece of paper. This actually happened. On June 22nd, 2011, win, lose, or draw, I will withdraw from the metals market and the mining shares. Now, I got in there, and I remembered that in April and May. And of course, gold topped out in September. And I didn't sell physical, and I sold a fair amount of the miners, but it wasn't because of greed. It was because we hadn't had the public mania, because I really believed that by 2010, 11, we would have had that mania, which would have taken silver up into 3 digits. And the mining stocks moonshots. We'd had some pretty good runs before then, as you know, but we didn't have any of that. And so I thought, well, that part hasn't happened yet. And I stuck around. And I remember selling on the way down and trying to buy back and things. I never dreamed it would go down to late 2015. And then even after 2016, it would be 2 more years that would grind away those profits. And I did pretty well in 2016 on that 6-month run up. That was the precursor to what we're going to see, I think. But, one particular stock, and I can give it, it doesn't matter anymore, but I can give the name if you want. But I sold that stock, and I'd had it at the higher level. I finally got out at about $9.50. Now, this would have been maybe 2012 or something like that. I bought that stock back at 49 cents. And it's the biggest producer of silver in China. And it's about $6 or $7 now. But I mean, it slaughtered everything. The best of the best went down 90%, and a lot of them blew away, and the explorers went down 98%. It was terrible. And I remember 2 or 3 years into that, when silver dropped below $26, I was very concerned, because it hit that area 4 times. And when the price bangs up against support or resistance on that 4th time, especially if there's a distance between it, that's something of big concern is probably going to go through. And I really should have packed it all in then, but I didn't. And again, it wasn't to greed. It was due maybe a little bit to not being smart enough. I don't know. But I remember Rick Rule talking around that time, saying this could go on for several more years. And I thought he's probably right. But if I had believed that, and if I would have said, I cannot do this, and I would have given up. But I was not smart enough to know it was going to, and I kept at it. And I kept trying to improve my writing and my investing and stuff. And I'm still here. And I'm starting to make some money now, but a lot of people quit, and a lot of them quit last year. And I know some personally said, I can't take it any longer. So that's something that it had a profound effect on me, but it didn't scar me to the point to where I can't look at the future, come up with a plan and modify that plan, because I want to be at the winner's table with a lot of these people. And a lot of our listeners will be there if they keep track and they understand themselves first and what they're about, and then the market second, and don't get too greedy.
Yeah, and plus, what's the alternative? Buying treasuries from Goldman, and what fun is that? David, real quick before I toss the last question for today, for folks at home, I hope you're having as much fun as I am listening to this beautiful piece of history and knowledge. And if anybody else is having fantasies for the Silver Make-A-Wish Foundation of David Smith testifying against Goldman Sachs and JP Morgan in a precious metals courtroom coming to a theater near you soon, hopefully we'll be able to broadcast it on the channel. But if anybody else likes the sound of that, hit the like button or the share button, even better, and tell us how you're enjoying David Smith's talk here. David, the last one, you did mention September 11th. Interesting day for me. I was running from the dust cloud. I was working for Moody's at the time. So I was actually down there and heard the second plane hit the building. It came from the south side. I was a couple blocks north. Wasn't until over 10, 15 years later that I ever even knew there was gold and silver in the World Trade Centers. What do you know about that? And anything you remember from the trading of what happened to the silver price at that time?
Well, they locked limit up for, I don't know how long it took them to close the markets for a few days, but it was stunning. And I'm still, when I think of that and I look at some of those videos, I can't believe what happened, and I can't believe our response. I think it was, the Patriots Act was put out there 30 days later, a couple thousand pages, and you can't tell me they put that together from 20 drafts written in pencil after 9/11. It was sitting there to be used, and it was so sad that how much we've lost since then. And so silver is kind of like a beacon, I think, that is shining a light out there that's a bright light that so many other areas in our life in terms of privacy and freedom to do things have been dimmed. And so it is a bright light shining there. And every time you hold it in your hands or you give somebody some, I've given these little 10th ounce silvers when I go to South America, and no matter who it is, whether it's a cabbie or a restaurant owner or another colleague, they always get a smile on their face when they rub that silver between their thumb and forefinger. It's kind of slippery, and there's something about silver that not that much less than gold that really makes you smile when you have some in your hand.
Yeah, well, I'm gonna I say that I'll pick up some of my first majestic silver cubes that I have sitting on my desk, keeping me company here. So David, quite well said, especially at this time. I mean, I know it's one thing for the guy who lived through one round to sit here and make Fed jokes about it, but can't say thank you enough for the knowledge you shared here. Perhaps before we wrap up, could you let folks know where they can find you, how they can get access to your great insight?
Sure. I'm the senior analyst at the Morgan Report. I contribute something just about every month to David Morgan's letter. And I do a lot of the mining tours. Once we get past COVID, start doing that again. Also, I write a monthly essay for Money Metals Exchange. And David and I are both ambassadors for the Lode Cryptographic Silver Project, which we've been working with them almost since their inception, almost 4 years from now, where we have silver-backed digital coins and gold-backed digital coins. And we're trying to create a new monetary system, which is is really ready for prime time. And we're excited about it. And I think when the time comes when you can't get the physical, you're going to be able to go to get the digital silver that'll have the silver stored in the vault for you. And you'll own the AGX coin that will back that up in the vault someplace in the world. And people can go learn about that at AGXPay or LODE.1 and see what the value proposition is and if that might interest them. So that's where they could go.
Well, I appreciate that, David. Here is the Morgan Report, found at themorganreport.com. And I think I had seen some of your articles on money metals. We had Stephen Gleason on recently. Actually, this is one of the places I go for my rhodium spot price, where rhodium has been going palladium and platinum has been going rhodium, and then soon wonder what will happen to silver. David, thank you again for joining me. Also, a special thanks to Silver Sands, silver project that will seemingly have leverage to the move, but go check it out for yourself. Consult your financial advisors, but that's a stock to be aware of. With that said, Dave, thanks again for joining me. The only thing else I can say is I apologize. It's been as long as it has. We'll have to do this on again soon, and perhaps maybe we'll even have a necessary appearance if we get some more action later this week.
Sounds good to me. And I always appreciate speaking with you, Chris, and you take care.
All right. Thank you, my friend. And folks at home, we will be back tonight. I'm going to get you that physical market update from Sheckman. And depending on if we have some fireworks in the price, we'll be covering all night if needed. So with that said, hit the subscribe button, the notification bell, and I will see you again soon. And we